Welcome back to our weekly webinar series. This week, Real Estate Economics is covering value analysis and product identification for land acquisition opportunities. At this point, we're going to consider how do we use our market knowledge to our advantage. Now, just briefly recapping, we've seen this market has very little activity underneath 225,000 for new homes. Really under 300,000 there are very few floor plans and still fewer units under construction. We're going to target those lower price ranges. If you look at it in terms of unit sizes, the story remains the same. Homes under 2,500 square feet have only 6 floor plans, and presently there are no units available in the existing communities. Many of these communities undermix these smaller units to drive higher lot residuals several years ago. That no longer suits the market. We can see in this particular market area that under 250,000 catches about 80% of the market resales, and the same can be said for unit sizes. The sizes under 2,500 square feet capture more than 80% of the resales. So how do we use what we know? We're going to target these market positions with the most potent demand by overweighting the smaller and more affordable house. We can adjust the mix over time to compensate to changing market conditions, but initially we want to get the right houses on the ground by including in our coverage the right price and size that we've talked about, but also buyer profile. We recognize we have millions of baby boomers coming towards us. Many of those boomers have been forced out of the job market. This particular recession has been very tough on older buyers, and many of them would like to cash out high equity conditions, put some money in the bank, and consider a lower cost living area. Moreno Valley certainly fits that bill. So what we're going to do, we're going to include 1 or 2 plans that are maybe outside those very small, low-priced homes, just to move with the market over time. And how we're going to improve that coverage or secure that complete market coverage is through room, garage, and configuration options. We want a 3-bedroom house to have a 4th option. We want a 2-car garage to have a 3rd option. We want office, library, hobby options, that sort of thing, so that we can ensure maximum market coverage. Our competitors are going to see the success in this program over time, so we want to make sure that we've done the best we can to complete our size, price, and buyer profile coverage. So let's look at our first draft product. We have 5 floor plans here ranging from 1,450 to 2,550 square feet. Shown in yellow are sales rates. So sales rates will be crucial later. If we decide we like this program and we understand the lot residuals, we can blend the lot residuals with the sales rate to ensure maximum present value to this community. As you can see, we've used single-level homes in the 2 smallest plans. Then we've got a very efficient 2-story at 1,950 square feet. We want that to be a low-cost, easy-to-build design, and one that provides the best possible yard area for families. In this particular market, rear yard area could be important. We could also have some potential for a home that orients to the front based on the demographics here. Plan 4 is our age-targeted house, a larger single-story, talking to our baby boomers. And our largest house at 2,550 square feet, that's really on the edge of what the current market wants to buy right now. So we've got that at a low sales rate, but over time that house could come toward us. And if the lot residual is right, it really secures our market coverage and spreads us out appropriately to get the most market demand out of our land ownership here. Here we've plotted the prices. This is a little hard to see, but the red line is foreclosures, the blue line is recorded new home sales, the green line is resales, and at the top with the red dots is our plotted program. Now, the market pricing, you can tell, is pretty well known here. There's not much price discovery taking place, and that can be observed in the parallel lines. The fact that those lines tend to coincide means that the market understands where the values need to be. Now, in regards to the blue new home line, why is that so low? Remember, this market is full of legacy homes, larger homes that now have very low value ratios to keep that inventory moving. So that new home price line is understated. On the green resales, recall that this market has an average year built of before 1990. It's about 1989. So that 20-year-old construction has maybe 10, 12, 15% of depreciation in it. So if we looked at recently built homes and current listings, which we could do if we decide we like this program in this area, those lines would plot between the resale line and our new home line. So what we would see is our new home line is about 20% above the resales on the small homes where the new home market is so poorly supplied, but that differential narrows considerably. If you look out to 2,500 square feet, the differential between the resale line and our new home price line is only about 10%. So we're moving closer to the market where the market has less demand, and we're really targeting our price advantage in the lower homes where there just aren't many new home opportunities. Let's plug that into our lot residual again. 5 floor plans. We've adjusted the direct construction cost shown in white for the difference in the 1 and 2 story plan. We should be building with some efficiency on those 2 stories and using low cost designs that will help the residuals there. Shown in white and yellow are the indicated lot residuals. This is just a generic static lot residual. We know everyone out there has one, but the reason we want to run this plan by plan is we can see a big price differential from the small house to the large house. Now if you recall, the large house doesn't sell that great presently, and the small house sells quite well. So if we blend those lot values and those absorption rates into a present value analysis, we can really drive a mix that will return the highest present value to the land in this particular case. So what's the advantage of this? We think if you're a broker and you're out pitching landowners saying, why should I get your listing and how should that be priced? If you have this market knowledge, there's definitely a price advantage in knowing the opportunities. Builders, the same story. This particular case study, we could duplicate this in many markets across the state. There are gaps in market coverage that are becoming increasingly pronounced as bread and butter price ranges sell out, across the state, and that inventory is very slow to rebuild. Investors, go into the markets where their builders are soon to come and where there's market advantages that everyone's looking for. And lenders, we see lenders have had bad experiences in some markets, and so if we're courting lenders in the next couple of quarters, we'd like to make sure that what we're bringing to them has a market advantage and has a niche that will secure their deal. Landowners, I can't tell you the number of deals we've seen where a change in use, frequently from some high density or attached program into a lower density detached program, has doubled the underlying residual value in many cases, and we recognize there's a loss in time due to entitlements, that sort of thing, but the returns can be very promising. Really, land acquisition teams, what we're hoping we're showing today is a quick and inexpensive way to screen deals on a low cost basis. You can use your own floor plans, your own costs, or drive something out of the market, all within a fairly short amount of time. This is a competitive market with developing niches. As the recession shakes out, there's going to be chances here that are way better than the opportunities in other places. What we want to do is stack the deck in your favor. This is a review of what we do here, and much of what you've seen today comes in under our National Real Estate Consulting Services. Site-specific and feasibility studies talk to just the things we're talking to today. Supply and demand analysis, we can dig into the market and see where the opportunities are. Land optimization, that's where we do blend the lot residuals with the sales rates on an individual community basis or a master plan community basis to drive the highest return to the land. We also have online website services, new home profiles. We've seen those today in our housing transaction report, which we got quite a bit of use out of in today's case study. This is our group. Top left is Mark. Many of you know Mark. I'm John. Please call me. You can see the number in case anything didn't make sense or you'd like to ask any questions. Judy on the bottom left is our subscription sales director. Call her to subscribe, and Sandy is our customer support person. Will help get the most out of your subscription products. Thank you for joining us today. Join us next week.